In this video, we're going to talk about what you need to know about setting up an IRS payment plan that fits your budget. Have you ever wondered how much the IRS will accept for your payment plan? Knowing that answer could save you from financial stress and get you back on track. The IRS offers several options to help taxpayers manage their debt over time. Let's break down how much the IRS will accept for a payment plan so you can navigate the process confidently and find a solution that fits your budget. First, let's explore the basics of an IRS installment agreement and the different types available. You might be asking, what is an installment agreement? An installment agreement is a payment plan that allows you to pay your tax debt over time in monthly installments. Let's move to the different types of installment agreements. There's a guaranteed installment agreement, and that's for taxpayers who owe $10,000 or less. The IRS is required to agree if you meet certain criteria. Then there's a streamlined installment agreement, and that's for individuals who owe up to $50,000, and some programs allow for up to $100,000. In this, no detailed financial information is required. The only caveat is you have 72 months to make the payments or the collection statute expiration date, whichever is shorter. Next, there's the non-streamlined installment agreements, and that's for debts exceeding $50,000. This requires full financial disclosure using Form 433F or Form 433A. And the payment terms are negotiated based on your financial situation and your ability to pay. So what are the key benefits of these installment agreements? First and foremost, they stop collection actions like levies and garnishments. They allow you to pay off your debt in manageable amounts. Next, let's give you some examples. Before we continue, remember to like and subscribe. For debts up to $50,000, the IRS typically allows you to divide your total debt by 72 months to calculate your minimum monthly payment. So if you owe $18,000 divided by 72 months equals $250 per month. That should be the most amount you are required to pay back to the IRS. Now here's a tip. If you can afford to pay a higher amount, consider paying more to settle the debt faster. Moving on to the non-streamlined installment agreement. And remember, this is for debts over $50,000. You will need to provide a detailed financial information using your Form 433F or Form 433A. The IRS will calculate your monthly disposable income by subtracting allowable expenses from your total income. So what are allowable expenses? Allowable expenses are based on IRS national and local standards for living expenses. So let me explain to you how the non-streamlined installment agreement works. Let's say you owe over $50,000. The IRS would want $50,000 divided by 72 months, and that will be your payment, your minimum required payment. However, once you submit your financials, your Form 433A or your 433F, you can demonstrate to the IRS that you do not have the ability to pay the other amount. And the maximum amount you will be required to pay to the IRS is your disposable income at the end of your financial statements. Finally, let's cover the strategies to ensure your payment plan is accepted and remain in good standing. Be proactive and timely. Don't wait for the IRS to initiate enforcement actions. You should also provide accurate information. Ensure that all forms and financial disclosures are complete and truthful. Next, it's important to stay current with tax obligations. File all required tax returns. The IRS requires that all your tax filings are up to date before approving any payment plan. And most importantly, pay future taxes on time. Continue to withhold or make estimated tax payments to avoid accumulating new debts. Lastly, stay committed to your payment plan and monitor your accounts regularly to ensure compliance and avoid default. Navigating IRS payment plans can be very complex, but you don't have to do it alone. Click the link below to schedule a confidential consultation with me. We'll assess your situation, determine the best installment agreement for you, and help you set up a payment plan that aligns with your financial capabilities.